Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Friday, January 11th, 2019. As I mentioned in the trading room yesterday, I decided to cut it out. I cut out early yesterday to run some errands, and that went really throughout the afternoon and into a poker game last night. So I wasn't able to get a market wrap up. Not a whole lot to report really. It was we close. Here's the closing values yesterday. I'm doing this video in pre-market. The Qs were up, slightly positive. There was a lot of back and forth throughout the day, but again, hardly anything. So we still have those little, we'll call them Russian dolls, stacking with smaller and smaller candles. So yesterday's candle was a little bigger, but we didn't really go anywhere. And again, the key things, we're going to jump over to the futures real quick. I'll keep this video short. So we have the Qs still at pretty significant resistance right around there, give or take about 160.30 and change, right below the 50-day moving average. Again, that resistance level is defined by quite a few reactions. We're at some fib retracements, all that good stuff. So there's QQQ, SPY. Story being near term overbought at resistance. SPY, like I said, I can add lots of levels here. I should remove some of these lower, or just I'll change the color on these later. But we have SPY at about the 259.25 resistance level. SPY is still, it's really the only major index below its, or at least between QQQ and small caps and mid caps. SPY is well below the 50-day, not well below. Let's try to measure that for you, just give you an idea in case SPY wants to go up and kiss that. I have to move back over here. It's about 1%. So again, it didn't. We were up only 1/3%, which lately is virtually a flat day compared to the big sticks that we've had recently. And you can see again a lot of overhead resistance coming up. Small caps, let's just jump over that real quick. Small caps this was a major support zone back here, which broke, and once it broke, you had a waterfall sell-off. That zone you can see defined by all these reactions back here in the past. Very important support zone. Support, once broken, becomes resistance, and you can see once that support zone broke, the floodgates open. That is a waterfall sell-off. That helps to validate that as a very important support level in the past. And the more significant support is once broken, the more significant it should be on the upside as resistance. So, I maintain, I've been saying it for a week now, same story. The upside I think is limited. The RR, at least for the near term, is skewed to the downside. There's the 50-day, like I said, which is capped. Did a great job of support in the past on IWM and QQQ and SPY. So we're running up to the intersecting 50-day exponential moving average resistance as well as support levels on the markets, give or take about, I think at most 1% upside from here. Got to give it to the markets. At least yesterday they were resilient, but that, of course, that had to do with the Fed comments that came out, Fed commentary. Let's move on to the futures. That's where I see a little bit more to point out right now. All right, so here's ES. In the same story, we've been wedging up now for what seems like a lifetime, but we've had some powerful again, we had on the daily, you can see the big moves, and the momentum is clearly waning now. So you can see as we inch higher, the momentum has clearly slowed, and that's why you have these momentum indicators. They show you this is what you look for impending trend reversals. You see negative divergence, just like you had negative divergence right here, here. That played out. Doesn't look like a lot here, but that was about a 3% drop or so, at least on QQQ. I think it was over 3%. And now what we have here essentially is a even larger bearish rising wedge. Let me clear all. Oops, let's make this very clean and simple. Let's just use this right now as our divergence line for the most recent high. And you don't have to have divergence under an entire wedge, only at the top part of it. Again, I've mentioned that this trend line isn't very well defined. It only has two reactions so far, and it may or may not get a third. It is support. It's a level to watch. I think if we come in and hit it today, which I suspect we will, we have some reaction lows right there. In fact, I could extend that line to the left a little bit. I would be surprised if we didn't have at least a little hiccup there, a little slight reaction, but I still favor a move down. Earlier in the week, I was favoring a move down to that trend line, which would intersect with that key 25, 2250-ish level. I've colored that line yellow. In fact, what I've done here to keep it simple is I've changed these two lines to yellow. This is my preferred. Well, that nothing's changed there. I was still looking for a move down to at least that level, possibly this level, and I still am. But however, earlier in the week, that 225, 2250-ish level came in with the trend line, and it no longer does. Because of course trend lines, if you have an uptrend line, every day the value comes in higher and higher. So this is now what I'm looking for. I still think we will hit that trend line, but now I'm expecting a break below it. And again, what it's done at this point, it's set up a larger, a pretty clear bearish rising wedge pattern right now. We had a smaller wedge before. Now we have even a larger wedge. So that would be, this is my target zone. Let's just say at this point in time, this is my preferred target, and that might be it. We'll also say it's my minimum target, 25, 2250-ish. Although I would put decent odds that we'll continue on down here to about 2493. And let me measure that out for you. Again, the futures, this chart's live. The SPY and QQQ and IWM I just showed you. Market hasn't opened yet, so that's as of yesterday's close. So what I'm going to do is try to grab about where we are now down to there. You're talking about a 2.5% move. Is that right? Almost 2.5%, and down to this lower line, that's about almost 3.5%. So it's about, yeah, a little more. I think I was calling for 3% early in the week. We've moved up a little bit higher, so now as much as a 3.5% drop in the S&P 500, and that would also be about a little shy of 2.5% drop if that first minimum target's hit. Let's jump over to NQ. NQ, you can see again what I've done here, the yellow lines. We have a little bit of more of a differential now between the uptrend line on NQ and ES. And the uptrend line at this point, if we have a pretty quick swoon down today, we can actually hit them both. What I'm talking about, the 64.70.26 support level, and then this 64.10. That's still my preferred target right now, 64.10.50, give or take. That is a level, again, that was an important level that we broke out of recently. Breakout, back test, and a move higher. So we had this smaller wedge right here, which is broken, but we've caught support. You can see all these lines are support or resistance, and this is where we've been, stalling at recently. If you recall from a couple weeks ago from back here, I believe it was these levels that were my upside targets. So essentially those have been hit, and that's not my final upside targets. Again, it's for this initial leg up, and I do think, again, we come back down like this. Let's clean all these out, keep it very simple. Come in, come back down here. If we hit it today, that'd be that 64.70-ish level, 64.70 and a quarter. And at that point, I would expect a reaction because you have two pretty decent. You have a support level right there, and that goes all the way back. You have a reaction here as well, and you have the uptrend line coming into play. And as you can see here, let's clean those out. Let's just let's point out the divergences, which have only grown larger now. We have this negative divergence right here, negative divergence here, and this is consecutive divergence here on the PPO. We had divergence building up to that point as well. PPO is now turned back down again, is pointing lower, hasn't crossed below that zero line yet, but if it does, that would be an additional sell signal, or at least confirmation that the near-term trend may have changed. So that's it. Looking for a move like this, 64.70 and change, somewhere around there. Probably a likely reaction when that's hit, and at some point maybe come on back down and break that and come back down here to about 64.10.50, which at this point in time would be my, again, at this point in time, my maximum target right there, and try to measure that out for you. I need a trend line here. Let's grab where we're at right now in NQ. These are the NASDAQ 100 futures. That is about a 1 point, not too much, about 2%, if I did that right. And then to come all the way down here, to 64.10.50, you're talking about Yeah, about 3. So yeah, there it is. Still looking for about a 3% pullback in the markets. Today's Friday. We'll see what happens, and then that most likely will have to continue in the next week if we get it. I'll say this: the markets have been extremely resilient, and I'll continue to reiterate that intermediate term, I still think we go higher, and I'm talking, into January, possibly and quite likely into February as well. But until then, we're getting a little stretched on the upside. And as I showed you on the daily charts, and you can see here, we're coming into some pretty decent resistance. There's quite a bit of reactions here. You can see my next resistance level all the way up here, about 68, 78 or so. For members of the site, since I was gone yesterday afternoon and evening, and as well, I actually had to run out early for an appointment today, and I'm back now. I wanted to get the video out before. I wanted to just show you this. Usually, this is my crude charts. Anything other than the broad markets, that's reserved for members of the site. But I do want to point out and I've been updating this as well. Crude, CL, crude futures, we've just broken down. So we have this rising wedge right here. You can see the divergence. It confirms that wedge. You can see it really dropping off here, double negative divergence in the PPO, and we just this morning had a sell signal. We broke down below there. I also mentioned on the site earlier this week that what I was looking at is right here. This period here was a period of sideways consolidation from mid-November into December, about mid-December, very significant. And then, as often is the case, when I come across a price channel, whether it's a sideways price channel like this, whether it's upward sloping or downward sloping, almost more often than not, I can put a line about in the middle of the channel, and that line seems to act as support or resistance where you can trade off of. You can see back here, it was resistance at this point. Once you popped above it, it was support. Got below it, it was resistance again, popped above it. And you see when you pop above it too, it's almost a sure thing you're going to head to the top of the channel. And that's what happens. You come back down, same story when you break below. So I found this in trading. It's uncanny how often when you find these channels, just put a midpoint line and then you can trade off that within the channel. And now my point is the top, the bottom, and the middle of that price channel are support and resistance. So there's the top, 52.43. We popped above it briefly yesterday, but now you can see we've taken it out as well as this uptrend line. So this would sort of jive with the market. Crude's been trading largely in lockstep with the broad market. So there may be a short coming up on crude, and you can see the targets 50.46, 48.42, and or this uptrend line right here, whichever comes in first. So we'll see how that plays out. And again, most likely a trade on crude. The success or failure of a short on crude here will largely depend on what the broad market does. Not exclusively, but lately it's not a perfect correlation, but very much to a large extent, crude has been trading, like I said, in lockstep with the broad market. So if you take both trades and consider that it's considered almost a concentrated position right now because of the tight correlation. That could disconnect at any time, but as of now, that's what we're seeing. So there it is, looking for pullback in crude. Probably feel stronger on this crude pullback because you can see we've already broken down right here. But I think they're all, like I said, the risk reward on both the broad markets and crude. At this point in time, the momentum's strong. I wouldn't short the boat, load the boat on the short side right now. Long-term accounts, and nothing has changed. I still think there's more upside, in the coming weeks here, and crude as well. I think there's more upside in that, but I think in the near term, soon we're going to see some profit taken, a little pullback, which you can either game on the short side as an active trader, or if you're long, book profits, or look to get in long on a pullback. There's the support levels and targets. Okay, we'll wrap it up here so I can get this out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.